All right, what is going on, everyone? Let's dig in. What's happening? What's happening? Sorry for the slight delay. And Yeah, I'm also still working out the uh, chat issues. I'm using Restream. It's going to multiple places at once. It doesn't look like Twitter's coming in. So if anyone is trying to chat, apologies. I'll hopefully get that sorted soon. Wanted to start off today with just kind of a quick little update, which is exciting. So these are going to be syndicated by Masari. So Long Read Sunday, which a lot of you guys know, and these 3 at 3s, Masari is going to jump in to help share them, get us a broader audience, hopefully expand the conversation. So for me, it's all about kind of just getting more people involved and getting more people who are getting to be part of it. So excited to work with those folks over at Masari, and let's dive into our first topic. All right. So I bet a lot of you guys have seen this news today. So news broke that the CFTC, the Commodity Futures Trading Commission, has approved Ledger X for a Bitcoin futures product that is physically settled, which means that it's actually resolved. Basically, it's settled in Bitcoin. So the buyer receives Bitcoin rather than cash. This is kind of an important part of the I guess the investment product landscape, you could say, right? I think for a lot of the folks, so it's interesting. So if you look back about a year and a half ago, 2 years ago, to the end of the ICO boom, I think a lot of people thought what was going to happen was this massive shift into STOs from ICOs, and that every ICO advisor is going to shift over to STOs and do security token offerings and all this sort of thing. When what actually happened is that a lot of people turned their attention back to Bitcoin and started focusing on what are the set of investment products that people who are interested in Bitcoin need and want, and want to use, but they don't have access to because just that infrastructure isn't there. And I think that a lot of the story of the last 18 months has actually been around that, has been around people kind of building out the set of financial products and investment products that are specifically for kind of the Bitcoin ecosystem. This is the next step in that. It's important, I think, mainly because it's not just like I think it's the first physically settled Bitcoin futures product that's been made available. And part of what makes it exciting is that it'll be actually available to retail investors as well. So anyways, you saw a largely excited kind of response. You had Alex Kruger Macro, who's obviously a great follow if you're interested in this sort of thing. There's a minimum account size. It's kind of part of the way that they'll deal with who's in the right position to actually take advantage of these products. You had the Block, who's writing about how this differs from future products coming from Backed, which obviously a lot of people have been excited about as well. The main difference being these are fully collateralized, so you can't trade on margin. The hopeful Backed products, or the Backed product, hopes to be available on margin. So that's kind of a difference there. And so exciting times, basically, I think, reflecting the continued growth and evolution and maturity of the investor product market for Bitcoin. And for those of you who want to dig more into this and learn more, Peter McCormick just released his latest podcast with one of the CFTC commissioners and how they think about crypto. So this is a really valuable interview, I think, for learning more about this. All right, and with that, we're on to something very different. So never one to shy away from controversy. Amin, who runs Spank Chain, posted this sort of semi-innocuous thing yesterday. What if Ethereum joined Libra? What if it secured $1 billion in user balances so it could muster $10 million to pay the fee and could join as a validator, right? And so, okay, so what this gets back to is Libra is the Facebook coin, obviously, the current cryptocurrency launched by Facebook. It has a set of currently 28 founding members. Those founding members have minimum requirements in terms of where they sit relative to their industry and how much money they have, but also their ability to commit both $10 million in initial investment, and also I think they estimate something like $300,000 or $280,000 to to run a node. It's the annual cost. So Amin was basically speculating on what if Ethereum did that? And well, who is Ethereum and how it could work in terms of actually raising the money to do it, and yada yada yada, and go on and so forth. So anyways, this is something that pretty quickly people started jumping into. Andrew, who just left Consensus and who started a $100 million fund. You have Rick, who's saying it's an interesting idea. You basically have a lot of folks who are jumping in thinking that this is kind of interesting. The flip side is you also have a lot of folks who think it's just nuts. So Vlad from the Ethereum community was not particularly into it. Why do you care? They could do what they want with their money and time. Why do you care about decentralization? So it's largely a philosophical point. Although there's a lot of interesting kind of counterpoint. Anyways, this created this whole very interesting conversation in Ethereum. However, it also, I didn't do the countdown. That's stupid. Well, you guys know that we're almost done. But anyways, so it also caused some consternation over in the Bitcoin community. Ethereum's greatest invention is the absolute degenerate perversion of the millennial mind. John always wanted to mince words. These people would rather live in a mental model of an economy than actually ever proving one. I honestly, this conversation devolved so quickly into name calling, kind of on both sides, that I didn't really get to figure out what John's main point was. I think that to some extent this may be just the fact that there's so much that is it's sort of such a speculative thing, and it kind of caused the whole community to go over. It could just be a disinterest in Libra and this sort of centralized things. It could be confirmation of this idea that the Ethereum community is just kind of doesn't care about the same things that the Bitcoin community does. Either way, I share it only as a good steward and curator of all the different perspectives on this thing. But this is a pretty fast moving world, and it wasn't long before people started actually showing or kind of trying to get in touch with the Facebook people. They put together a request for membership. They tagged a whole bunch of different organizations. Anyways, it's going to be interesting to watch. I think it's, as an outside observer, I think it's fascinating. And to me, the most interesting thing is to what extent every organization in the world that can muster $10 million is having the same conversation. I think on the one hand, it's sort of there's a FOMO of, is Facebook coin something that's too big to miss out on? On the other hand, there's something in the idea of the fact that they have to put together kind of a request for membership. Does that make it kind of irrelevant right from the get-go? So anyways, I think if nothing else, it's fascinating and is worth checking out. But let's move on to the final of today's 3 at 3. Let's actually restart this countdown. There we go. Okay, so this is really fascinating. So yesterday morning I woke up and saw a bunch of people talking about this thing called Pool Together. So basically the idea of Pool Together is a lossless lottery. And so effectively everyone buys into this lottery. That lottery is invested in a compound contract. And so it earns interest for the duration of the lottery. And one person who contributed gets that interest minus 10%, which goes to Pool Together, which is the organization that is managing the whole thing. The organization wrote a lot about kind of what the idea is and why they started to do it. Effectively, they wanted to have that fun and excitement of lotteries without the sort of just net loss, especially for communities who can't afford that loss, who tend to be the biggest kind of targets for lotteries. So anyways, first response was really, really positive. People were super stoked, right? So you have Balaji, who's coming in and saying, pool funds and die, collect interest, many good ideas here. An app like this is only possible because of what has happened, yada, yada, yada. Spencer Noon was also very excited about it. And then first people started to recognize that they're taking a cut. And, to be good to the Pool Together team, they weren't trying to hide this. In fact, they responded to Balaji's thread and made sure to be clear on that. But then people were like, okay, but there's other questions, which is, why aren't they open source? Because yesterday we found out that they were the code was closed. And they literally actually said in a couple of threads that the reason was they didn't want people to just fork it immediately and start a million different lotteries and kind of cut the market into many pieces. And on the one hand, this is super understandable, right? Like, we live in a world where if you're in open source, you're constantly worried about kind of forking to remove some token or some fee or some other area of friction, some founder's reward or dev tax or whatever you want to call it, right? Like, this is a really serious issue in terms of how open source companies are constructing their businesses, because it's a threat. Someone could always just come along and fork it and give people an option that doesn't have any sort of platform intermediary. That's the risk. And they were explicit. They were like, we're trying to avoid that. The community didn't respond, I think, the way that they wanted. People were really frustrated. And I think it goes to show that we haven't really developed norms yet of what is and isn't appropriate in terms of new projects and products that kind of sit in the middle and organize things, what they can reasonably ask to take a cut of and what they can't do. But one thing was for sure, the community was not going to be interested if they were going to stay closed source. So that same founder that put together the initial thread came back and said they did it early to do closed source just because it made sense from a business perspective, but that clearly it wasn't the right idea and they were going to switch it. And so they opened the source up, they went open source today. And I think this is a really cool example of these projects evolving in real time and these norms evolving in real time. And so, I think this project has a lot of promise. I think it's something that's super interesting and a great example of the type of financial coordination games that can happen with crypto assets. I'm really glad to see that they made this decision to switch to open source, because I think it would have been pretty DOA for folks if they hadn't. And now, they still run that risk of someone saying like, hey, I can do that better, and I'm just going to take advantage of the code you've already built and execute better than you. But at the same time, they're no longer going to lose on the basis of the community just being disinterested because they think they're not kind of good actors in the space. So I think it's a better place to start. So anyways, that is the 3 at 3 here. Oh, good. All right. Restream, the things are actually coming in. So I'll hang out for a few more minutes if anyone has questions. I know I think there's a slight delay. So if I'm responding a little bit after, apologies for that. But anyways, for those of you who are done, I'm wrapped. I'm just going to answer some questions now. So Tyrone likes this format. Awesome, man. I'm glad. I appreciate that. I know you've been messing around a lot with the live as well, which I've been loving. I saw you on Block TV today. Excited to see more of that. Hello, Michael. Good to see you. Pomp's partnership with Libra. I didn't see Pomp have an official partnership with Libra, but I could have just missed it. I did see Pomp this morning at the Bitcoin 2019 conference. He interviewed Tim Draper remotely. So that I thought was really interesting from that was Tim Draper was talking about a bet he had, or he didn't have, he tried to make with the president of Argentina around if the Bitcoin's performance outperformed peso in terms of just kind of value accrued or value lost. If Bitcoin was worse, Tim Draper would double his investment in Argentina, and if Bitcoin was better, the Argentinian president needed to recognize Bitcoin as an official currency. And I guess he just kind of shook his head at first, but then when Tim Draper said that Japan had done that, so Japan recognized Bitcoin, I guess, as legal tender earlier this year, they got sprung into action and asked one of his ministers to get in touch with the Japanese economic minister. So anyways, I thought that was pretty cool. And that was something that Pomp pulled out on stage. I'm actually sad to not be at Bitcoin 2019 in San Francisco. We used to live in San Francisco. We lived there for 10 years. There's a lot to love about it, especially the places around it, but not back there this time. I think it's going to be an awesome event, though. It's live streaming. For those of you who also are not in San Francisco, it's live. If you go to bitcoinmagazine.com, it's right on the front page and you can check it out. Anyways, thanks guys for hanging out, and I will be back tomorrow.